Good morning or good afternoon, depending on where you're living. We are excited to welcome you to this industry summit hosted by the Insurance Collaboration to Save Lives. There are still people joining, but we're going to get started pretty quickly here because we've got a lot to talk about and we're very excited to share. Our topic for today is the excess mortality that we've all been watching very attentively since March of 2020. And we like to say a peek under the iceberg because we think that those mortality stats are just the tip of the iceberg, that they're actually driven by a whole host of underlying causes. Today, we're going to dig into some of the medical drivers of excess mortality. My name is Valerie Chezem, and I have to tell you that I'm privileged to be your host today. I am an actuary, and actuaries are sometimes relegated to dark corners of the basement. So it's not often we get to be front and center. But the actuary within me felt compelled to include this very long disclaimer reminding you of very important things, such as the opinions today are though stated today are those of the participants, not of our employers, and similar grand disclaimers. The Insurance Collaboration to Save Lives is a nonprofit that was formed in response to the persisting excess mortality that we've seen since the pandemic. We've got about 100 people who've been contributing, including insurance executives, doctors, actuaries, lawyers, finance professionals. I would like to take a moment right now just to introduce several of the faces behind our vision who are intending to be on the call today. I haven't been able to verify all of them, but these folks should be available at the end if you have questions for them. So if you look on this side, you can see we've got Richard Watts. He was actually thinking about calling in from London, so I'm not sure if he's going to make it, but he is a former president of the Progressive Insurance. We've also got Brett Swanson, who is a chairman of the Indiana Public Retirement System. We're going to skip the actuaries who are going to be presenting later, and so we'll just kind of skip around a little bit here. We've also got Noelle Sproul, to which we are very grateful. She has been our legal counsel for our organization. On the right-hand side of the screen, there's other team leaders besides the board and the medical team. We're super grateful for all of their contribution. We've got Dr. Tom Lewis. He is a PhD who's been working on addressing many of the medical concerns that we're delving into today. We've also got Dr. Craig Bax. He's a medical doctor who has been incorporating some cutting edge medical interventions in his practice with a lot of success. I would also like to just call out Josh Stirling. We would like to give a special welcome to Josh, who has come to us from Wall Street, where he specialized in analyzing insurance stocks. And he was a top-rated analyst for 5 years. He was #1 for 2 years. My perspective is anyone who's good at spotting stock trends must be pretty good at spotting trends. And so we are grateful that he has put his expertise into helping the insurance industry address this dilemma that we're facing with the excess mortality. I'd like to go over, before we go there, we're just going to talk a little bit about logistics. So today we have the opportunity to have questions. If you have a question as we're going through the content, if you could just put it in the chat so that we can get to that at the end. We're going to try to save questions till the end. If you can address it directly to me, that would be great. My name is Valerie Chezem. Otherwise, you can, I guess, reply to everyone, but I will be organizing the questions at the end, so it'll be a little bit more effective. I would also like to give you fair warning that in a couple of slides, just so you're ready for it, there's going to be a QR code coming up. If you are like me and you like to dig into the details or zoom in so that you can see the PowerPoint presentation better, you can go to that QR code and get a copy of this presentation sent to you directly immediately so that you can look into it in more detail. Also, our website is insurancecollaboration.org if you don't have the access to the QR code. Today, we're going to take a journey. We're going to look through the historical mortality trends. We're going to see what some of those drivers are. We're going to see how the pandemic has been impacting things and look at those underlying causes. And we'll think about how the insurance industry can intervene and have a big impact. The presentation is the organization is really targeting a solution for life insurance industry. If you are in the life insurance industry and you're interested in what we're talking about and would like to have some conversations about if we could possibly help you work this out with as a company, you can also go to that QR code register. There's a free text box where you can just add comments as to what your involvement is, where you're at, and what you'd like to do, or what you're thinking, and we'll get back to you and reach out and have some conversations. If you are not in the insurance industry and you are listening and it's resonating with you and you're thinking, I wish there was something I could do, I would encourage you to think through it with us. Walk through it with us. Think about how these things are impacting your industry and how we could maybe do other things as a society that have a similar element as to what we're talking about, but are good impact ideas for your industry. And we would love to just hear some ideas of what you're thinking about and see if there's any way we can also contribute and assist or connect you to people who would be a good fit for what you're thinking about. Today, to start us off on the journey, I'm going to introduce the first member of our expert actuarial team, Teresa Winer, and she represents the regulators, and she's an actuary for the state of Georgia's insurance department. She's also been a former vice president of the Society of Actuaries. Teresa?
Hello, everyone. I am a regulator, but I must say I don't represent all regulators. I'm just representing myself. And I'm glad you're here. This slide has been up quite a while, so hopefully you've looked it over. And it's very remarkable that in the poll from two Society of Actuaries live meetings from last year and this year, still 31%, if you look at the top percentage of actuaries, believe that mortality will be increased 1 to 5% going forward without an end. You can also see that a good number of actuaries, the most recently, close to 50%, think increased mortality will continue for 3 years. So, and also the numbers for that, you can see there were 95% participants if you add up the participants there, and 95 in 2022 and 62 in 2023. So we had a good number of actuaries. There were different actuaries at each meeting, and we still saw some similar results. Now, this slide is sort of a composite of several slides. We've introduced several presentations. You can see the QR code, and you can see that some of the presenters are up here from the SIR conference. And this is one of the reasons I joined the group, is some of these top people affiliated with the group, and includes doctors, actuaries that are speaking today, and several others. And I've only met these other actuaries that are speaking this year, in spite of being 40 years in the business. And I'm just really happy to be with a group of such excellent people, and we're trying to work together. Doesn't matter what your opinions are, we welcome people, and we're trying to work together to come up with a value proposition for the industry to bend the mortality curve. So it's quite exciting to be with people that are all interested in putting the puzzle pieces together from many different arenas. So it's been my pleasure, and also Josh Stirling, thankful for him to bring us all together. And I'd like to turn control of the slides over to Josh now.
Thank you so much, Teresa, and thank you everybody for being here. We're really as a team delighted and honored to have such great turnout. And in the couple of weeks since we've really fundamentally launched, the amount of positive feedback we've gotten from industry partners and regulators here and around the world has been really amazing. So we just want to thank you for everybody who's interested, taking time out of your busy day to come here. Just so you have a sense of the organization of our presentation, I learned on Wall Street that you could have only 3 topics, and you have to speak to each of them, and you have to start at the beginning, and we're going to share with them right now. Sort of here's the 3 key points, and we're going to come back to them at the end, and the presentation is going to be organized around these 3 areas. And what they boil down to is that first, there is a problem, unfortunately. Mortality continues to be up, even through mid-year of 2023, especially in the younger ages. And that's, of course, from a societal perspective and from an insurer's perspective, quite troubling. It's also really notable that working age employed disability, or just disability overall, but within that, working age disability is at new records, and that's also really troubling. And so the original thesis of this group, which was there might be a problem here, let's go do more work to see if there is a problem. Unfortunately, the answer is there is a problem. Point number two is we're actuaries and analysts and medical people, and so we did lots of work. And we tried to figure out, well, okay, if there is a problem, what are some of the features of the problem, and what can we learn about the problem that we can then hopefully use to inform a proposal to drive towards a solution. And so, Mary Pat in particular, and a couple of the other folks on our team are going to talk in more detail about some of the actuarial analysis and some of the other medical and morbidity stuff we've done. But the headline there is that there are lots of different symptoms. But it does seem as though cardiac and circulatory link through a lot of it. And so, that insight then, not conclusory, but suggested by the data, informs the third step, which is that there are actual approaches that we can take that are cost effective for perhaps $100 or so per policyholder who's willing to opt in. But we can test people, identify those who are most at risk of elevated risk for cardiac or circulatory issues, as well as other health issues that are easy and cost-effective remediations. And doing those two things, we can, for testing for those two types of profiles, very cost-effectively, we can improve mortality in your books. And more importantly, we can make a positive impact on the greater society. And fundamentally, we think that's the role of the insurance industry. We can go to the next slide. I want to just take a moment or two about the context for this. Who are we? We're a nonprofit. We're based in Texas. We're legally formed in February of this year. It's an outgrowth of an effort of a smaller group of people that started about a year ago, working through a lot of these issues. A number of them are on the call today. If we continue, fundamentally what we are is we're a volunteer organization of a bunch of concerned insurance leaders who identified a mission to save lives and mitigate loss. And our goal is very clearly to save 1 million lives, which we think globally we can do by enabling and empowering insurers to screen, test, and triage for those insureds who are most at risk for elevated risk of untimely death or other serious health problems. And by doing good, by doing good, we can do well as an industry. This proactive intervention can save money and save lives, and we think it's worth doing. If we continue. We have to show you some of this, some of our momentum slides, of course, but I think they tell a good story, which is ultimately there's a problem. We came together, we did the insurance thing, and if I take just a moment about the coming together sense of this, I'm an insurance historian a little bit, and I'm not going to go on a long thing on this, but fundamentally what we're doing is no different than State Farm getting together as a bunch of farmers back in the 1920s and saying, what, those big city insurance companies aren't thinking about the risk the right way. We need to think about it because we know the farm. That was a model that had been done for hundreds of times across the country over many decades, and of course now that's the largest insurance company in Europe. It's not that much different from officers in the United States Armed Services doing the same thing with USAA. It's not that different from the ship owners coming together at Lloyd's. And when you think about sort of the granddaddy or the grandfather of all insurance here in the United States, it's pretty much identical to what Benjamin Franklin did when he created the first insurance company here, the Philadelphia Contribution Ship for Fire. And so this whole idea of the group coming together as a nonprofit, we're not a mutual because we're not an insurance company, but that same spirit of can do, let's solve the problem for our community. That's what this insurance industry has always been about, and that is the best in our industry, and that's what we've tried to bring to this problem. We can go to the next slide. That attitude of there's a problem, let's go fix it, leads down a path of discovery and research, which we did, and we're proud about the work. We're going to share some more about it today. Most importantly, is we came to a solution. We go to the final slide. Ultimately, what we think that you can do. And this is very much like the underwriters' laboratories or the big safety testing that's done by people like Hartford Steam Boiler or FM Global, on the risk management side, or perhaps one of my favorite examples, the Insurance Institute for Highway Safety, or HDLI. We basically pulled together this team of experts, all of these volunteers, this incredible intellectual brain power to basically study the problem, come up with a solution, offer it to the industry. What we're offering to you today is that solution. And with that, I'm going to introduce you to actually, I'm going to give it back to Teresa, excuse me. And she can take it from here. Thank you, Teresa.
Thank you. Yes, mortality and morbidity challenges are continuing. So this is a big concern. Now, this slide, I must give credit to Mary Pat Campbell, who's coming up to speak shortly. She updated this for January through May of this year from the CDC Wonder database. And you can see still the black dashed line, the most recent data show substantially elevated mortality at several age groups. Now, these are in 5-year age bands, and the title says particularly 15 to 45. I see it going up 10, even through the 45 to 49 age band. And this is a big concern to me about the insurance industry, because a lot of life products are marketed to people in this age group, and this is the time people think about buying insurance or increasing their insurance, their life insurance. And this is also a time when the reserves may not have been built up substantially by companies. So it is very concerning. Although you can see the older ages, there's still elevated mortality as well, which is very sad. And I think if you look at the baseline, which is 2019, we're comparing everything here to 2019. The reason we went with that is pre-COVID, there wasn't much flu. It was not a very eventful year. And you can see in 2018, that gray slide is very close to the baseline as well. So it's, the big concern for us is this large mortality. So let's go to the next slide to go about disability. When you look at disability and some other types, similar benefits, it does inversely relate to the economy at times, but there are also other factors involved. You can see in 2009, where we were coming out of the Great Recession, it was 11.4 and went up, and then it went back down. And that was as we were coming out of this recession. But actually the trend, if you look at the trend, in spite of these dips you see over time, the disability rates are going up fairly substantially. And most recently, it's very alarming that this is 16 and over, so they're working people, that this has gone up so much. So what I'm concerned about also as a regulator is this impacts claims costs, health claims, as well as life. And a lot of the health claims drivers for the trends are chronic care, number of people with chronic conditions, and the people at the last years of their life who submit quite a bit of claims. So yes, this is very concerning to me. And I just would like to, it's my honor to introduce to you the next speaker, who's Mary Pat Campbell, who is very highly esteemed, a vice president of Conning. She does a lot of insurance research. You can follow her on LinkedIn. If you're not, you're missing out. She does tons of research. So it's my honor to turn the slides over to Mary Pat.
Hello, thanks, Teresa. And so I'm going to take some of those mortality curves we were just looking at through the pandemic, but also pushing it back pre-pandemic, because a lot of these trends in mortality that we're concerned about, we're finding started pre-pandemic. Okay, so I'm going to do something a little different on this slide. We usually go left to right, but let's look at that right-hand side graph first, because this has the metric that's usually reported in the media, and that's life expectancy, period life expectancy. A lot of information about population mortality is collapsed into a single number. So you lose a lot of information. However, it does qualitatively get a lot of the mortality trend in there. And you can see the United States, when up against comparable countries, has much worse life expectancy. However, and especially during the pandemic, however, you can see that started well before the pandemic. Unfortunately, that includes I mean, and a lot of this comes from things that we're not going to be addressing in our solution we're presenting today. Stuff like the drug overdose problem that we know, well about, and that really took off starting around 2015. But you can see this lagging in life expectancy started well before then. So let's move to the graph on the left. This is from the World Health Organization, and we're using OECD countries. This is 38 countries. And you'll see there's about 9 countries that are worse than the US there. And I actually have the whole list. It's like Czechia, Estonia, Latvia, Lithuania, Hungary. So you're like, the countries that we would normally compare ourselves against have better mortality. These are age-adjusted death rates, where we've removed all of these external causes of death. So you can do that kind of thing with these metrics. So we're getting a little more complicated here. We're removing homicide, suicide, accidental causes of death, like accidental drug overdoses and motor vehicle accident deaths, which are higher in the US than a lot of these other countries. We're still worse. And even worse than that, if we look at them, most of these countries have improving death rates, and it kind of stalled out in the US. This graph on the left, this is all pre-pandemic. It stops in 2019. So a lot of these mortality trends we're concerned about started pre-pandemic. And what I'm about to show you is it got a lot worse during the pandemic. So one of the things that we're looking at are specific causes of death. And for all of these, I'm looking at what's called the underlying cause of death. So for each death certificate for each person, they get one and only one underlying cause of death. And we have some major categories. You often see, like, each year they have ranking. Okay, here's the top 10 causes of death. Well, here are some of these top 10. These are not all of them. I've selected them that are related to what we're looking at. So we're going to start on the left now. We're going to be a little more traditional. The top 2 for decades have been heart disease and cancer. And if you look at these 2 curves, and these are age-adjusted death rates, cancer has it's almost a straight line, has pretty steadily been improving, again, up until the pandemic, but not heart disease. Heart disease was improving until about the about 2010, and then it stalled out. And it was kind of getting worse, better. It kind of went sideways, and it got much worse during the pandemic. Then you can see both heart and cancer kind of went sideways, and heart disease got worse during the pandemic. I did put COVID on this graph just as a comparison, and it was number 3 in 2020 and 2010. 2020, 2021, but not in 2022. I actually have done a ranking table. I think it's number 4 now. Accidental causes of death came back to number 3. On the right are some of these causes of death that we're saying are blood-related, or inflammation, stroke, diabetes, kidney disease, and liver disease. And again, we saw, like with stroke, a lot of improvement, then goes sideways. Pre-pandemic, got worse during the pandemic. So we're seeing a lot of these stories. Diabetes, kidney disease, and liver disease were kind of sideways. We're not really seeing a lot of improvement. Pre-pandemic, got worse during the pandemic. So we see a lot of these similar stories. So now we're getting even more complicated. We're going from, like, very simple, high level detail, more and more detail. Now we're seeing what's happening during the pandemic, breaking it up into these 5-year age groups, comparing against 2019. Again, we're using 2019 as our baseline because it was kind of a boring year for a lot of these natural causes of death. And this vertical graph, it's a little light, so you might not see it. It goes from negative 10%, so negative is good in this case, it means mortality went down, up to positive 20%. That's bad. And we can see heart disease on the left. There are no negatives. It got worse for all of these age groups for 25 and up. And in these cases, it was worst in 2021. But we can see for oldest ages, it was getting bad, worse, and it's the worst in 2022. Who knows about 2023? And then we can see how that's trending. Cancer, you can see there's a mix. And so for cancer, maybe people are missing treatments, missing screening. We don't know. So this is just diagnostic. I don't know the cause-effect chain here. But again, look at these vertical scales, negative 10% to 20%, because on the next one, the scale is different. It starts at 0 and goes up to 40%. Yeah. And I start at age 35 because, of course, these are different rates. I don't want to show you ages, and some of these ages had much higher percent increases. Well, it's, you know, if it's a few hundred deaths over the entire country, you know, we want to look at credible changes. You know, they were very low rates. So started at age 35, but still, I mean, 40% increase. Really, really bad. So stroke and diabetes, these are huge increases. 20% is a huge increase in the death rate. And these are rates, not number of deaths. Though in this number of years, it's going to be qualitatively about the same in trend, whether it's death count or death rate that you are comparing. Next one, please. Okay, and so this is the last set of comparisons I'm going to make. This is yet again another vertical axis change. It was 20% was the highest in the first set, 40% was the highest on the next set. This goes up to 70%. Okay, and this is kidney and liver. Liver disease, yes, and I know some of this is due to alcohol abuse during the pandemic. And again, liver disease had a bad trend before the pandemic. And we're seeing the increase is worse at the youngest ages, 35 and 40. It's bad. It's really bad. But these do have a blood connection as well. And some of the biomarkers we're looking at have connections to kidney and liver function as well. But even so, kidney, oh, you know, it's down so little, but 30% increase for the younger ages, 35 to 39 and 40 to 44, 30% increase is a huge increase in mortality. A lot of people just have no idea how large some of these relative increases are because they just don't know what the baseline is. And, you know, this is some of the perspective that we're bringing to the problem. So I'm going to be handing this over to my next actuarial colleague, Steve Cyboran, CEO of Humiculture, where he puts his actuarial skills to work in a broader sense, consulting with companies to improve their business culture and thereby their productivity. So take it away, Steve.
Thank you very much, Mary Pat. We also looked at some of the underlying health issues that are driving costs, driving this increased mortality. Covering German hospital system, we looked at a reporting period from 2019 to 2022. These are the top 25 for the most elevated percentage signals in the various categories where we were seeing an impact. In our analysis, the increase in admissions for multiple diagnosis categories were of note, particularly in the areas of cancers, metabolic, lung, heart, perinatal, and circulatory. As we'll see later, increased health risk leads to increased mortality risk. And most people don't understand their health risk. And we'll talk about that as well. I'd like to focus on one area in particular. Next. In the CDC mortality data, we identified cardiac as having a notable overall increase. One of the most unusual changes in the German data is that tricuspid heart valve disorders and diseases. Here we present annual number of tricuspid cases on the left and January through May for a 2023 comparison on the right. Together, tricuspid heart cases are up 150% in 4 years, or 239% when looking at the first 5 months year over year. This is continuing increase of about 35% per year. Tricuspid usually accounts for about 10% of the rheumatic heart valve conditions, but we don't see a similar increase in the mitral or aortic valve in this data. This may suggest that some form of blood toxins, because the tricuspid valve is the first valve in the heart, or the doorway to the heart, and may bear the brunt of more than the rest of the body of any blood-related toxin. As you can see, we did a ton of detailed work. We'll email the complete worksheet to anyone who's interested in digging in or helping us. This is just an example to illustrate the possible insights that can be found in this type of a data set. We're not saying we've got all the answers or that this is 100% right. We are saying that we've done a lot of work and we're open to others reviewing and contributing to help us get more insights from this, or even better, if there was a way to get US data, they would love to look at what it means here in the US. It's just harder to get that information. Next. So we believe the increased mortality and morbidity necessitates some action. In all likelihood, this isn't baked into life insurance premiums already sold, so you can't raise the prices. However, you can mitigate the risk. As we will show you in the pilot that we ran, 93% of the pilot was at risk for at least one of the health measures that we focused on, even though 68% indicated that they were healthy and with no known health issues. Life insurance have a direct interest in improving mortality and morbidity to save lives and then save money. Insurance companies of all types measure, manage, and mitigate risk to improve financial outcomes. While life insurers have historically focused on managing risk at the point of sale and minimizing downside risk via reinsurance, there is opportunity to measure and mitigate the health risk of in-force policyholders as well. We're looking for companies that are interested in this and joining us and help the industry move forward and employ some of these ideas. Next. Our thought is that we can test policyholders to identify those at risk for adverse outcomes. And by communicating those results and triaging them to the appropriate interventions as needed to reduce that risk, insurers can save lives and save money. Next. So the concept is screen, test, and triage, and as a result, save lives, save money. Next. So life insurers can offer an added benefit to their policies and perhaps even provide some level of incentive to get screened via a short survey and a panel of tests. The policyholders would be classified based on risk and triage to appropriate resources and support to address the identified risks. We believe a targeted screening for unseen threats should provide significant impact, which is what our pilot found. Based on my experience working with many large organizations on wellness initiatives and reviewing and conducting research, including the Society of Actuaries, not every initiative is effective. However, you can have great impact if you have the right strategy, the right behavioral design, effective interventions, and the appropriate support. We're striving to balance each of these aspects. To test our concept, we conducted a pilot, and Josh will explain more about that and what we found. Our goal with the pilot was to develop a testing to achieve outcomes and make economic sense. For the pilot, we targeted a cost of $200 per test. For a book of business with the average face value of $200,000 in net cost, an insurer can expect to break even if one life is saved per 1,000 tests. We can target larger policies first if necessary. If insurers focus on a face value of $500,000 or more, then the break even for the pilot improves to at least 1 in 2,500, or $1 million, it's 1 in 5,000. Similarly, we could also look at a smaller panel of tests. Through our pilot, we were able to identify a panel of tests that identifies 80% of the risks and costs only about $100, which would break even with that $500,000 policy at 1 in 5,000. At $1 million, then 1 in 10,000. Even if we don't break even, there is goodwill benefit that with the policyholders if this is done right through an independent organizations where they believe this will be held confidential and done for their benefit. I'd like to turn it back to Josh now.
Thank you, Steve. So I don't expect all of you to read this slide, but if you want to, you can go to our website right now, log in, and all you do is click the button that says send me your deck, and then there's some bot or something that will send you a deck. And so you can actually read this closely with a magnifying glass if you want to. This might be the most important research we found in this whole project, though, because this is a study of like nearly 250,000 people they tracked for 15 years with something like 25 different biomarkers to figure out the all-cause mortality, as well as a couple of other things, the all-cause mortality group. And we're including it here because it's to make the point, not that this study is the end all be all, or that, a single scientific approach is the right way, but medical science is pretty advanced. And there's a lot of information out there that we can use as insurers and as actuaries and analysts and people who are business problem solvers to try to deploy from that profession into our own and to try to make a positive impact. And so what we found is, when we're going through this, is we actually found there's a whole world of this mortality research where we can kind of stand on the shoulders of giants and really make a huge impact by testing people. And then, because we're focused on improving mortality, focusing on that as the endpoint and ultimately trying to drive intervention, testing, screening, testing, and triage to drive interventions. If we go to the next slide, what we did in our group, because we were coming at this from the perspective of a bunch of business people, and me personally recently in the insurtech space, where it's very much like, roll up your sleeves, get your hands dirty, and build. We started thinking about, well, how can we really better understand this? We said, well, I'd like to take, one of our doctors from our team very suggested, Josh, you need to take the test. And I'm like, you're right, I need to take the test. And then it became like, well, everybody wants to take the test. And so we ended up having basically a pilot, which is effectively a feasibility attempt to try to do a test for everybody in the group. And so we pulled together with our team of medical practitioners and advisors, and referencing some of the research like I just shared previously, we pulled together and importantly, the entire effort being informed by the actuarial work that was shared by Teresa and Teresa and Mary Pat and Steve in their slides. We basically identified we wanted to find markers for inflammation and injury and event risks, all in sort of the cardiac and circulatory space. We wanted to look at heart and kidney disease and liver disease and things like that too, sort of a bit more lifestyle oriented. And then infection and immune areas. And so for anybody who's medically oriented, this is a list of the tests we ran in our pilot, which we didn't find we could do for $400, or sorry, for $200. We spent more money because we wanted to test more things, but then we'll talk about how we refined that using business judgment and the results. We go to the next slide. These are some of the more important signals that we found, and these aren't from our data, this is from published research, the table's on the next. But what it illustrates is some fundamentally powerful things like, vitamin D, we all kind of know you're supposed to take it. Most of us don't know much about it. Apparently it's a very, very strong long-term all-cause mortality benefit. And so if we did nothing else from this call, we should all just go out and take vitamin D and get our policyholders to take vitamin. Like, it's sort of a layup. Like, there doesn't seem to be much downside risk, and it's very statistically proven. Similarly, there's some other things where, homocysteine, perhaps we'll talk about in a minute. But then, obviously a lot of these other measures, unfortunately, they're things that they're elevated, it's a problem. D-dimer, troponin, CRP, these are some things you may have heard of. Interestingly enough, lipids and stuff like that, cholesterol tends to be less impactful than I think is generally perceived. But substantively, we can use this data to inform actuarial and underwriting and fundamentally sort of this risk management, or PNC term, loss control, risk mitigation. We can use this insight to inform our efforts here. We'll go to the next page. We're including this just so you have it. This is a research where we got all those other citations. If you don't mind going one more, Brian. Just to talk briefly about what was in our pilot. Again, really just a prototype, if you will. It was our group. Look at a bunch of average, middle-aged insurance executives. 2/3 are pretty healthy. Had range of COVID experiences. Average age 54, pretty balanced by gender. What was interesting was not the composition. Obviously we're probably more educated. We're probably better health in the population, possibly because of education and income and stuff like that. But if you go to the next page, Brian, what you will see is that 93% of us, even though 68% thought we were healthy, had at least one abnormal result when you do a blood test. It's a range of blood tests. And then if you dig into it a little bit, what you see is that 76% of us had at least one signal related to something in the blood, or in the cardiac or circulatory world. About 40%, and this one's very unsurprising, had some signs of like long-term heart and kidney disease, because those are just American lifestyle diseases. But the longer-term immune issue is also interesting. And so if we continue to the next slide, though, because you do have to say, ultimately, one biomarker, bad day, there's a fair range around the test, you want to confirm things before you draw conclusions. Well, a majority of our people in our group and in our pilot had, or more than a majority, 55%, had 3 or more abnormal markers. And when you start looking at it by sort of confirmed groupings, if you will, by 2 or more, what you find is about a third of us had 2 or more cardiac findings, cardiac and circulatory. The cardiometabolic, that's really the lifestyle disease. Again, that's not surprising. But these other things are definitely insightful. And of course, the 34% of cardiac and circulatory is certainly troubling. Brian, if we go to the next slide, this is sort of the Consumer Reports version, so you can quickly see that most of our important markers had people who had elevated levels. There's a couple that were, very small, and so those tend to be expensive, not as cost effective. But the vast majority of these things are broad, and things like inflammation, cardiac and blood inflammation, which is basically super correlated with like everything else that's going on badly. So it's sort of a good, smoke alarm, perhaps. That was 24%. Of people, and that could ultimately be a predictor of lots of different things downstream. Even though it's in your blood, it's obviously a big system. It has lots of touch points. But the D-dimer for blood clots and thrombosis, that was 24%. There's a couple of measures of cardiac issues. NT-proBNP. That's a test the life insurance industry uses quite a lot for underwriting. That was about a 21% elevated rate. Troponin 14%. If we continue, if you pull this together, if we had like the money that we will in a couple of years or maybe months, because the way this is going, you could build a really cool set of data science to use all these like amazing studies from these like researchers and make really complicated models. And I know everybody on the call is an actuary or data science would love to do that. We didn't have the money. We didn't actually have that data because we don't have the money to buy it from these people who've done the studies yet. So we're doing it more the old fashioned way. Like we got a bunch of doctors together and we played with Excel and we stuck it together in a bunch of these charts. And then we met and we reviewed them, over many, many weeks over the summer. And that's where we get to on page 37. I just wanted to spend a little bit more time on emphasis on this. So, the 3 big takeaways: there's a problem, there's a lot of causes, or there's a lot of like symptoms, but it does seem blood and cardiac related. And then there's a solution. Those are the 3 things you have to remember. But if you want to go one level deeper, this is the slide, because this is how you can help people. And the first on the left-hand side is very clear. This is the thing that will drive the economics of this initiative in the short term, which is that in our sample, 14% of people had 3 or more markers of cardiac or circulatory inflammation or injury. That's not great. Now, is this a super elevated risk factor? No, but is that something they should manage? And do those people statistically, through like the science I've already showed you, that was either, the published research, which is where you can get these mortality ratios from, or like our own data, which sort of helps you figure out the sense of like perhaps how much a population might have with a big range of uncertainty around that, given we had a very small group of people. We only had 29 folks. Where you end up concluding is that there's a huge impact to help these people. And the interventions range from like taking aspirin and being careful about like physical strenuous activity to like, obviously going to talk to your GP and maybe a cardiologist to something more serious, right? And because there are interventions, medical science is amazing. If it knows it's a problem, it's very good at throwing a lot of tools at it, but most of these people did not know they had problems. And so this is the opportunity for insurers. And we talk mostly about life in these things. There's even some P&C implications as well. Maybe in the Q&A, we can talk a little bit about that. In the second category, because if you're going to go test people and you're going to ask them to get tested, it's a shame to not test them for other stuff where you can make a difference. And things like homocysteine and vitamin D, we throw them together because the intervention for these things, people who have basically an abnormal biomarker on one of these things are going to have long-term mortality that's worse than it should. And there's various reasons for that. But basically, it's a super easily remediable vitamin deficiency. It's going to cost you like 10 cents a day. And like if the insurance company wanted to, it could just drop mail the stuff to the people. If they, it's not, it's the costs involved here are trivial. They're really nothing. So it's just a question mostly of a bit of education, motivation, and perhaps, maybe even in policy incentive or like, the gift card or something to get people to get like the free iTunes download if you like, take the test or whatever anybody wants to come up with is a creative thing. Ultimately, those are really big impactful things. And if you go to page, or somebody just stay with that, maybe we can stay where we are, it's fine. I'm sorry, apologies, we changed the order now, it's used to the old order. The so what with this is that if you were to go back to one of the slides previously, and I am not saying you have to do this now, but like you go back to the research slide that shows the hazard ratio for elevated blood markers, the ones that are elevated that are a problem typically are a 20 or 30% higher long-term mortality. The ones that are better, vitamin D principally that we're testing for, are typically like a 15 or 20% lower mortality rate if you're like in the target range. And so if you're a person like me who went through this process, and I luckily wasn't in the first group, but I was in the second group on both buckets, because I didn't have a balanced diet and I didn't take any supplements. And we're not like selling supplements or making any money off it or anything, but like the reality is I didn't have enough. I had too much homocysteine and I had too little vitamin D. On a personal basis, I'm addressing this for about 6 months. I'm feeling a lot better. I feel like I look better, whatever, who knows? But the statistics say that Lincoln, who I've got like a 25 or 30 year more like term policy with, my expected loss cost for my personal mortality is probably down by about 50%, maybe, somewhere between 40 and 50% from what it was 6 months ago. And they're getting the same premiums and they're carrying the same reserves. And so if you scale up that specific case up to like thousands and tens of thousands of people, this is just a very simple economic opportunity to reduce the cost of risk for the insurance industry. If we go to page 38 now that I'm done with sharing my personal health information, I mentioned that we tested way more. We tested a lot. We actually spent about $400, maybe $350 or something like that per panel, because we decided we wanted to test some things and then screen them out. But what we ended up finding was that we could get most of the bang for the buck. And you can see how we, because we're actuaries and analysts, we tried to optimize it, whatever. But basically, we can get most of the bang for the buck for about $100. You're testing with D-dimer, you're testing with HSCRP. You've got some like lipoprotein A, homocysteine. I probably shouldn't read all of these because it's just a lot of time. But the point is, we're testing for most of the key categories. If you've got policies that are more expensive, like higher limits, or you just want to be more complete, then we would add in the gold heart check, which is the yellow stuff, which is like troponin and NT-proBNP. If you wanted to offer a solution for like long COVID, which is probably good for marketing, and there's definitely people who suffer, then like testing the antibodies seems like it's a thing. Seems like it's a thing too that we found. This probably doesn't go in a standard package, but it could be if it was interested in relating to your marketing. But in big picture, we got this just using sort of wholesale and the trade pricing from some of the doctors we booked. If we as the insurance industry did this and really like try to negotiate prices, you can cut all these numbers probably in half in terms of cost. So huge opportunity, very low, very high ROI, because the extreme amounts of opportunity on the upside and really trivial cost per person. We go to page 39, please. I just want to recap briefly. Where did we start? Mortality is a problem, disability is a problem. So mortality and morbidity are both up. That's a problem. The analysis basically shows that it's lots of symptoms, it presents in lots of different ways. Possibly it's cardiac and circulatory. Certainly that's suggested by a lot of the data we've shared today, and that's what we are thought. But the final, and the only thing that really matters here is that at the end of the day, none of the precursor matters. All that matters is that for less than $100, we can probably go out and find the policyholders that are in your book who are like, have some degree of like health risk they don't know about, that we as insurance industry can try to solve that problem. And it's there's a metaphor with this, there's a metaphor on that final point that I guess maybe I'll share. We talked about Benjamin Franklin before with the fire insurance industry and how he started the first fire insurance company, and then he also started the first volunteer fire department, because it's like you're going to do both sides. You want to put out the fires, but you also want to pay for the loss. Today, we still kind of do that. Big companies like Chubb or AIG that have high net worth homeowners. Well, if they have a home in the mountains in California and it's a wealthy home, and like they have a crew available, they'll send the fire department, basically the private fire department, display flame retardant on the house, because the home is at risk and they could lose like a couple of $1 million when the wildfire is going through the valley. What we found, and the so what with our story, is that we think there is a wildfire loose, and we think it's the role, among the health of many of our insured population. And we think just like the insurance industry wants to spend a little bit of money to save like a big loss on a home, when there's wildfire approaching by spraying it, or if they got a boat in the hurricane, they pay them to move the boat to move it out of the way of the hurricane. Lots of examples like this. We think that there's a big opportunity for the life insurance industry basically to embrace the opportunity to get control of their costs, to reduce the outcomes, and ultimately, to do well by doing good. And if we go to the final page, just to recap, and then I think we transition to sort of just I think we got a poll. I also want to take one of the questions maybe we start with, and then we can to introduce somebody to answer it. But just to wrap it up, I mean, these are the key points. I think I've probably spoken to them, but if you share this deck with others and you need to try to remember what we said, look, it boils down to this, and you could just throw the rest away. And what's not on the page, and if you go to page 41, is we're trying to lead, but the insurance collaboration, the collaboration is in the name. So what that really means is that we've gotten it here, and now we're looking to partner with all of you to like take it to the next step. Again, go back to that metaphor of like the farmers mutuals or these like loss bureaus or any of the big industry associations that you just all take in your mind as like normal, this is the way it is. Well, it's this way because like 100 years ago or 150 years ago, a bunch of people got together and said, we need to do this as a group. And then over time, they became institutionalized in bureaucracies. What we're doing is creating the vehicle, which is still fluid, is exactly what this is going to be because it's collaborative, which means we're inviting people to the party and we're going to all try to solve and work on this problem together. And it will evolve depending on who joins and who wants to. But I will tell you, we're in conversations with people from Singapore. We're in conversations with people from like continental Europe. We're in conversations with people in Bermuda. Just last night I got a call from a Mountain West state who wants me to like speak at like a farm bureau meeting, like in 3 days about how exciting this opportunity is. Like, I think there's real momentum here. And I will tell you, after doing 3 or 4 of these conferences, this has been something that people come up to us, regulators from around the globe, that I haven't already mentioned, like, in the Caribbean, saying like, this is the best presentation I've ever seen in an actuarial conference. Like, and when can you come to my island to present to our actuarial group? So I think we're going places. And my ask to you is like, please think about this content and think about how you can help. And whether it's in our group, whether it's in your company, whether it's some merger of those, we're going to make momentum one way or the other. But it's, the more people we can get involved who care, who help, is the more successful we'll be. And with that, I would say we want to be respectful of. Oh my gosh, I've talked for far too long. Can I ask? I'm going to ask one person to jump in because I got a good question. Personally, I think it's worth for everybody to answer, which is Richard Watts was introduced earlier. He happens to be he's one of our officers of the group. He's on the board, former president of Progressive. Richard, the question was basically, so what are you really guys going to do with companies, and are they actually interested? Like, it's just, is this actually a chance this could actually work? And I thought maybe you could answer that based on some of your conversation.
Sure. Although I think a lot of your last part of that on that last slide covered a lot of it. First off, I've got to apologize for the way I look. I just landed in London after a trip from hell from Florida, and it was a really, really rough road to get here, but I made it, and so I'm doing all right. There actually has been, Josh, a great deal of interest. Actually, and more interest as they hear more. So I've been very, very pleased from the life companies, from employee benefits, from those with disability programs, and actually even in the liability lines, which we actually never even thought about before just a couple of weeks ago, especially in the commercial trucking, commercial fleets. So, and as Josh just mentioned, most of them view it as a great opportunity to bring risk management to their life and disability books. One other area that people may want to look at would be if they've got any kind of wellness programs. There seems to be a lot of interest integrating this with wellness programs. So those companies that are somehow or other integrating Fitbit and things along those lines, whether the information from the test can be ingested into their databases for that. And those interested have actually, as Josh just mentioned, I mean, we've had a lot of interest from Global 50 insurers, and like he said, US, Europe, Singapore, Bermuda, and we would absolutely love to work with any of you who are interested in this crucial topic, and to save money, but also save lives.
Thank you so much, Richard. Can I just say then the big difference, and maybe Brian would be able to go back to the slide with the 5 profiles. There's about 70% of people who have a vitamin D deficiency. Probably
37.
25 or 30% are clinical, but like maybe 2/3 or more than around 2/3 or 70% have some form of like below optimal levels. This is easily remediable. The testing costs very little money and has big impact on insurers and easy to change lifestyle. About maybe around a third, but like 28% of people have high homocysteine. These people are at risk for long-term heart attacks. They don't know. No one talks about it. It's well proven in the science. It's an easy thing to remediate. Again, super cheap, pennies a day. And then finally, 14% of people that we found in our group, and so maybe that number is really like 5%, or maybe it's 25% if you scale it up across a different population. We don't know, but it was not zero. And these are people who have likely, well, it's certainly not many predictions. They have elevated biomarkers of at least 3 or more cardiac and circulatory markers of inflammation or injury. These people need some form of investigation by a medical professional. If in the absence of that, they're in a much higher risk trajectory, and so like our opportunity is that the cost of finding that out is very low, compared to the cost of the loss of like letting the house burn down. We can just spray with a little bit of fire retardant. We don't even pay for the fire retardant. We just pay for them to get an appointment for the fire retardant for in the life insurance industry. And so, ultimately, it's a very simple idea. And I think it's like the tools. It's like using the power of the Fitbit and like the tools of wellness programs, stuff like that. But we're focused on a much more targeted set of outcomes because we have real business deliverables, which is we want to save lives and we want to save money. And I think, I appreciate everybody who's taken the time to be here. Thank you very much. I'm Josh at insurancecollaboration.org. You can find most of us on LinkedIn. Reach out to however it is be helpful if you want to try to find us. My phone number is all over the place. If you have it on your email, I'm happy to hear from there too. We're busy talking to companies. If we're not talking to your company, we'd love to be introduced to the right people at your company. And if you want to put more time into this, we welcome collaboration. That's why it's in the name. Join. We'll keep talking about it, and we're going to find the solution. And we just ask you to and I want to say thank you to everybody who joined us. I want to thank especially the team who pulled this presentation together. And I want to thank everybody who's been involved in this really from the beginning, but in particular, the crew who's just powered through the past 9 months of endless amounts of work to get to this. So thank you, everybody, and have a great day, and I appreciate your time.